All right. Well, thank you everyone for joining us. We on our webinar on home buying. I hope everyone is safe and their families are safe during these difficult times, but definitely appreciate you joining us. I'd like to welcome the students and alumni of Enactus who is joining us with us, members from the GTA Grizzlies, part of the Canadian Junior Football League, and members from the Ottawa Symphony. And my name is Michael Borrelli. I'm the Senior Branch Manager with Alterna Savings, leading the flagship branch at Bain College here in Toronto. I also have Alex Goots here, Manager of Personal Finance, who will help. Say hi, Alex. Yeah. Who will help me facilitate our presentation. He directly oversees our bankers to ensure we're providing sound financial advice, as well as offering the best possible member experience. And I use the word member specifically, and we'll touch upon that after. That's one of the differences with a credit union and Alterna specifically. And a quick little background on myself. I've been working in the financial industry for 18 years, most of which was with TD Bank, holding various leadership roles. I've recently joined the team here at Alterna Savings, and it's been incredible. The attention we show our members, the experience and knowledge that our bankers have, and really the commitment to the local community we serve has been remarkable. And I'm so grateful to be part of such an amazing team, and I'm hoping that you'll see the value in this presentation, and hopefully we'll foster a great relationship going forward. Personally, my wife and I have two beautiful daughters, whom I am grooming to be the next Canadian soccer superstars. I'm also an avid soccer player, not doing much these days, so putting on the pounds. And I volunteer my time coaching and developing youth within the soccer community. So for all the GTA Grizzlies out there, I highly value sports, teamwork, the discipline it takes. I'm also a musician and performing on stage. Again, not much happening here, and I'm losing the calluses on my fingers. So, so for those who are part of the Ottawa Symphony, definitely value your expertise, discipline. I know what it takes, and so thank you for joining us. Tonight, we're very excited to spend some time to discuss home buying and the various aspects of the home buying process. Everyone is at a different stage in their life. Some individuals have experience with purchasing a home. Some of us are seeing this for the first time. In either case, the home buying experience is a huge undertaking, and the more information you have at your fingertips, the more educated you'll be when making these critical decisions. Questions like, how much can I afford? How much of a down payment do I need? How do I qualify? Fixed or variable mortgage? These are the types of questions that we'll be discussing in our session tonight. This is an open forum, so we will take the time to stop and ask periodically if you have any questions. Sometimes I don't like to wait till the end because you might forget your questions. There are no stupid questions. Odds are if you have a question, someone else here has the same one. So ask away. We definitely want to take the fear out of home buying. Let's go here. Okay, bear with me while I get into the next one. So, just before we get into that home buying process, I'd like to share with you the Alterna difference very, very quickly. Alterna has been a financial services institute for over 112 years, starting as CS Co-op in 1908. This is important. The reason why I want to share that with you. We have weathered the Spanish flu pandemic of 1918, the Great Depression of 1930s, 2 world wars, the 1970s energy crisis, numerous recessions in the 1980s and the 90s, and most recently in 2008. And we are currently navigating through a worldwide pandemic with compassion and understanding. Alterna has endured many challenges throughout the past century, which is a testament to our commitment to our members and the communities we serve. There is a difference between us and a big bank. But what do we offer? What you might not know about Alterna Savings is that we're a full-fledged financial institution that offers all the same services and products that a typical big bank would offer. From everyday banking products such as checking accounts and savings accounts to investment products such as fixed term and mutual funds, Alterna is very much a one-stop shop. We're highly involved in the local community. We serve many nonprofit organizations, small business owners, enterprise ventures with packages that suit their individual needs. We are able to be nimble. We can view things with a lens that fits your specific personal or business needs. Mortgages, loans, wealth management, you name it, we can help. And again, it is the local community that our presence in the local community that really sets us apart from everyone else. So again, we're, however, you might be asking, what's the difference then? Why would anyone bank at a credit union? I currently bank at a big bank. Well, why would I switch? I had very similar questions when I started here at Alterna Savings, and I can say with confidence, the difference is in our membership. At Alterna, you are not an account number or a faceless customer, you are a member. What does that mean? It means that Alterna is a cooperative between members who have a voting right to make meaningful change within the organization. You get to vote for our board of directors. We offer competitive rates. We have experienced bankers who have the knowledge and know-how to offer the very best possible financial solutions for you. We have convenient digital banking solutions and a bilingual contact center. One thing that I'd like to highlight here is that second point on the left, if it's on your left. At Alterna, we put people before profits. We are in the business of people. It just so happens we work in the financial industry. And with that comes our commitment to the community, commitments to the Ottawa Symphony, the commitments to the GTA Grizzlies, the commitments to the Enactus Club. We're strong supporters of Candlelighters, a non-profit organization that provides programs and services to young cancer patients and their families. We support youth athletics. We're the official institution of the National Lacrosse League in Canada. We support athletics such as the GTA Grizzlies. We have a microfinance team who solely supports local entrepreneurs. In 2019, Alterna donated over $1 million to local organizations, which includes, of course, Enactus. I believe we donated $50,000 last year. And we increased it from $25,000 a year previously because we definitely want to support. Overall, Alterna believes in making profits serve a purpose. Well, and we're truly the good in banking. So I say all that as a preface. Like, why are we here? Why is Alterna kind of, having this presentation? You need to know what those differences are. But let's get into some of the meat and potatoes of our presentation today. Buying a home. Okay. So, buying a home is similar to planning any kind of large event, such as a wedding. To get what you want, and you need to be educated, informed, and prepared. Here's what you're going to need to get started. You need to understand the cost of home ownership. Determine your readiness for home ownership. Save for a down payment. Find out how much you can afford by getting a mortgage pre-approval. Consider getting a credit report or understand your credit status. And we can talk about that more, of course, in the presentation. Find a reputable real estate agent and a lawyer. That's part of, understanding the readiness of home. Before we dig in, we'd first like to review some of the advantages and disadvantages of home ownership versus renting. So Alex, I'm gonna transfer that over to you. I'll let you kind of look at that.
Okay, thank you, Michael. And I hope you can hear me. There's some construction going on in the building. So home ownership is a dream for many Canadians. And given that you're on this call, I think it's safe to say that you have at least thought about owning a home. And that said, we do want to point out that there are advantages and disadvantages to both renting and owning. So when it comes to renting, some of the advantages do include improved cash flow and ability to save, as typically, if you were to compare the cost of paying a mortgage and all the additional expenses that come with it, renting does turn out to be cheaper. And the old adage goes that if you were to invest that difference, after 25 to 30 years, you would come out to be at around the same spot compared to somebody who did buy a home. But it is a challenge to actually follow through and invest those savings. Life happens, Black Friday happens, and we got to pay those credit card bills at the end of the day. And finally, if you do want to save up for a down payment, you need to have that discipline and actually putting the money towards that down payment. So if you want to take a look at how you can make that portion of saving automated, do reach out to us at the end, and we'll discuss that after the presentation. So for advantages of owning, many compare the regular mortgage payment to a forced savings plan that builds your net worth or the equity in your home. So every mortgage payment essentially has two components. The portion that goes to pay the interest that you owe on the mortgage, and the other portion goes to the principal. And it's that principal payment that increases the equity every single month that you make those payments. And finally, you are free to renovate your home. Your imagination is often the limit, and the local applicable bylaws, of course. But if you don't like the look of the kitchen and you rent, often your only option is to move, whereas you can use that existing equity in your home to actually renovate your home. Additionally, for your rent, your landlord can often increase your rent almost on an annual basis. And while some apartments are protected or geared to inflation, there's many other renters who are often at the mercy of their landlord as to what their payment is going to look like when their lease is up. So with a fixed rate mortgage, you at least have some sort of certainty for the duration of your mortgage term as to how much you're going to pay every month. And I'll get to the fixed mortgage rate and what it means in a moment. So Michael, if we could go to the next slide. So the disadvantages of renting, they're somewhat obvious, and there's a common expression that if you're renting, you are paying somebody else's mortgage. So it's often a strategy for some Canadians, if they own a home or an apartment, that they rent it out and use the rent to pay down the mortgage, right? And if you're not building equity, and unless you're diligently saving every month, your net worth does not improve with your rent payments. And I've already mentioned that you're not able to make major renovations when you rent. And the final point, I think that many of those that rent have had the misfortune of having to move, often with limited notice at their own expense, with not a lot of choices sometimes available to them. And for those who do own their own home, it's also not all rainbows and sunshine either. There are added expenses such as maintenance and upkeep, insurance, utilities, property taxes that sometimes vary from month to month. So you don't have that same predictability of how much your expenses are going to be. And the property values can also depreciate, sometimes drastically. While we in the GTA have been mostly insulated from what we have seen with the rest of the country, such as parts of Alberta with the oil crash, their property prices just cratered. And as well as we've seen with our neighbors south of the border, with the 2008 financial crisis, they often had to walk away from their homes because they owed more in their mortgages than the homes would possibly sell for. But having said that, we're not completely immune, because as we saw in April of 2017, when property prices plunged about 10 to 15% practically overnight. We have since recovered, but we can fully predict that property values will continue. We cannot fully predict that the property prices will continue to appreciate, and there is a small but valid risk that one may end up with a mortgage that is higher than the value of their property. So if we go to the next slide, and then over to you, Michael.
Okay, thanks, Alex. So really what we wanted to capture is there's obviously a difference between renting and owning. There are challenges on both sides, but there's also benefits on both sides. And I think it really depends on your certain circumstance and what you're trying to achieve, throughout your life stages. The cost of home ownership is something that many people underestimate. And again, it's to take the fear out of home ownership is to understand what it's all about. The more understanding, and that's kind of in life in general, the more understanding that you have and education you have on a certain subject will give you the power to make better decisions for you and your family. There are very many variables to consider when you have on the cost of a home ownership. Throughout your home ownership journey, you should have a good understanding of what costs are associated with closing the home, and then ongoing costs that you might have, right? You don't want to be a surprise of a bill that comes in after you've closed, or maybe there's a lawyer, a line on the lawyer's fees that, really caught you off guard. It's important to know exactly what you've set aside. Have you set aside enough funds to close the home? But did you think about running the home efficiently? Let's quickly review some of these points. You'll need to enlist the services of a real estate lawyer. This can cost anywhere between $500 to $2,000, depending on the lawyer. And then we can touch upon how you get a reputable lawyer later on in the presentation. If you're purchasing a resale home, so not a new build, you'll definitely want to pay for a home inspection. This is important, as you want to ensure that electrical is up to code, plumbing is sufficient, floorboards are not deteriorating, potential mold issues, and more. A successful inspection should be a condition upon purchase. So if you need to write anything down and you're not going to look at this recording, that's going to be your first thing. You need to have an inspection completed to make sure that the bones of the property are intact and that you don't have to drop another $50,000 to do electrical. Okay. Down payment. This is another one that you really got to think about. Have you saved enough for your initial down payment? Will you be putting down 20% to avoid the mortgage insurance premium? Alex, you want to touch upon the mortgage insurance premium? What does that mean?
Sorry, I was on mute. So in Canada, the minimum down payment on a home under $500,000 is 5%, and since then it increased for the portion over $1 million. It's 10%. So if you want to purchase a home of $500,000, you can go down with $25,000 as your down payment. However, you do have to pay an insurance premium. So this is the default insurance, and it's there to protect the bank or the lender, but also to protect the Canadian economy and avoid what we saw in 2008 in the United States, where they'll cover the difference between what the home potentially sells for and what is owed on the mortgage to the financial institution, so that they would not be in that same bind as the banks in the United States were. Right? In Canada, we didn't have to bail out our banks, but in the States, they did. So the cost of the insurance, and I think the slide is a little bit dated, but it goes as high as 4.6% of the purchase price. So we're talking about most of your down payment, if you're getting insurance, would be going towards paying that insurance premium. So essentially, you're starting with less than 1% equity. Now, having said that, the way property prices have historically been appreciating in the GTA, that is quickly eliminated just with the property appreciating through the real estate market. But if you wish to avoid that significant expense and you're able to save for that down payment to be at least 20% of the purchase price, then you can avoid that expense entirely. So that is one advantage of going with a conventional mortgage. So a high ratio mortgage would be one where it's less than 20% down payment, and a conventional mortgage would be where you put at least 20% down. Now, what you will find oftentimes, if you're looking at advertisements for mortgage rates, for example, they will put an asterisk for high ratio only, and that's what it's referring to, because the lender or the financial institution that's selling that mortgage is protected. They are able to offer oftentimes lower mortgage rates as a result. So that's one way to offset in the long term that cost of the premium, because you are able to receive oftentimes a much lower rate as well. So
yeah, that's very good. That's very good, Alex. That's a lot of information. And again, guys, some of this you're going to be able to absorb. Some of this is going to go over your head. Some of this you're going to get. The number one thing that I can tell you is you have to take the time to sit down with an advisor, right? And ask the questions, get more information, ask the questions. You might not get it all today, and that's okay. It's about having some kind of idea, like, what do you mean about the 20%? I can't afford to get 20% as a down payment. I would highly encourage you to look at that, because again, saving on the mortgage insurance premium is a huge bonus for your, building your equity in your home. So again, there will be more time spent with you, with an advisor, to go through some of the details. There are strategies available in order to help you gain more money for your down payment, namely using your RSPs as a first-time home buyer, and we'll get into a little bit more in just a moment. Another cost I want to put in there really briefly is an appraisal. From the bank's perspective, you're going to need an appraisal to ensure that we're aligned with market values, right? This is important to note, because if the appraisal comes back less than the purchase price, so you purchase it for $500,000, but our appraisal actually comes back as $480,000, that difference there, the homeowner or potential homeowner is going to be responsible for that money. That's out of your own resources, right? So, you want to try to avoid, I would say, overbidding, overpaying for homes, right? Because if you overbid on a home, then you got to understand that money is going to come straight from your pocket and not going to be in from a mortgage. So I think that's really important to understand, that the difference will need to come from your own resources. I'm going to stop there, and I'm going to ask if anybody has any questions, because I highly recommend, if you have any questions, just ask. It's all good, open forum. Any questions around down payment or, lawyer fees, inspections?
I have a quick question, sorry.
Yeah, please.
For the appraisal fee, like, when does the appraisal usually happens? Because for GTA, houses goes by like really quick. They go in the market like on a Friday, and then Monday it's sold. So I know for the inspection fee, like the home inspection, you need to get that right away. But when does the appraisal also happen?
Great question. I would say, so Alex, I don't know if you want to take that. Go ahead.
Yeah, I'll take that question. So thank you for asking, and that's a very good question. So typically, when you work with a realtor, they will ask you if you are going in with a conditional or firm offer. So if you go in with a condition of financing, typically they would give you 5 business days to arrange for a mortgage. So during those 5 business days, you would work with your lender to arrange for that appraisal. And we are experienced with these types of things, and we typically arrange for a rushed appraisal in these situations. Everybody from our credit adjudication team to our appraiser partners, those accredited appraisers, are fully aware of the deadlines that we're working with in order to arrange an inspection and evaluation of the property. So that's if you have a conditional financing. If you are going in with a firm offer, meaning you're completely committed to the purchase of this property and you cannot walk away, the appraisal is less of a time constraint. It will happen sometime prior to closing.
Yeah, great. I would just suggest to you guys, no matter what, especially if you're a first-time home buyer, please put down a condition, two conditions really. Condition of finance, that you're able to secure the finance, right? Typically that's a 5-day to 10-day, but 5 business day condition of finance that you can secure a mortgage, right? And a condition of inspection. Those are the two that are very, very important. If you go firm on an offer, that means you're buying it. If the appraisal comes back less, you're on the hook for it. If the inspection, if you decide to do an inspection afterwards and electrical is no good, you're on the hook for it. 100%, in my opinion, please put down a condition of finance or a condition of inspection. That's important. And if you're going to lose the house because, somebody else is bidding and they're putting out a firm offer, it might just not be the right one for you. There is lots of homes out there. Opportunity and timing will connect. But great question. Anybody else have any questions?
I had a quick question, actually. So I noticed in your slide that you had kind of the closing costs that are associated with closing on a home or a condo. And I'm aware that there's like land transfer tax fees. So I know that it's different in Toronto versus outside of Toronto, or is it the GTA? I kind of just wanted some clarification on that. If you can provide some, that would be great. Yeah,
great. Alex, you got that?
Yes, so the land transfer tax was introduced quite some time ago, and I'm surprised we didn't include it in the slide. So again, excellent question. So in the GTA, it essentially doubles up. Sorry, not in the GTA, in City of Toronto specifically, City of Toronto doubles the land transfer tax. And there is a rebate available for first-time home buyers as well. So there are online calculators available to calculate exactly how much that would cost, and the rebate is, so long as the property price is under $400,000, you're eligible for that first-time home buyer rebate as well. But it can be significant if we're looking at a purchase price of about $500,000. You're probably looking for the provincial portion to be about, I believe, $18,000. But if you go to the online calculators, there's so many available. You plug in the purchase price. It'll tell you exactly what it will be.
And when you say like City of Toronto, like, are you talking like GTA, or are you just speaking like? No,
specifically City of Toronto. So if you're north of Steeles, or I forget what the divider is for Mississauga and Toronto, or Scarborough and Pickering, but essentially City of Toronto, to raise revenue, it doubled up or piggybacked on the province's land transfer tax.
Okay, thank you.
Yeah, great question. Thanks, Alex, for articulating that. Yeah, land transfer tax is a significant amount, right? So 18,000, 20,000, 25,000, depending on the value of the home, something to consider part of your closing costs. So thank you for that. And then we need to include that in our next slide. Any other question that you might have? Okay, we're going to move on to the next piece. Okay. So determining your readiness to own a home. So it's important to know how much you can afford before looking for a home. Mortgage payments will be the biggest expense. However, there are other costs you should also consider. You got to determine what your assets and liabilities are. calculate your net worth, understand, your spending habits. How much do you earn on a monthly basis? How much do you spend on a monthly basis? Doing a budget calculator, and there's one on Alterna.ca, and there's lots of ones out there. It's actually quite important, especially as a first-time home buyer, because you don't want to go to that maximum level. Because if you do that, you're really going to be, sometimes people call it, I'm a house poor, right? Meaning that all of my money goes towards my home, and then I don't have other funds to do other things, renovate, extracurricular activity, maybe you want to take a course, things like that. So it's good to do a budget calculator. The difference of what you earn and what you spend is an estimate of the maximum monthly mortgage payment you can afford. So calculate the total funds you need up front. Understand how much funds you need to cover the upfront costs, such as down payment, those land transfer tax, thanks, Ellie, the land transfer tax, lawyer fees, moving costs. Put that all in there. And I would say when I did my first time home buyer, when I did it much higher. I did it very conservatively. I didn't undershoot it, I overshot it. So at the end of it, once I was done with the lawyer and the real estate agent and everything, I ended up having a couple $1,000s extra because I over budgeted, especially when it comes to buying a home. Determine how your budget will look as a homeowner. Take advantage of that free financial planning offered by Alterna Savings to help prepare you for that home ownership. And again, it's on our calculator, or it's on our website. Sorry. Okay. So how to start saving for your down payment? There's a few strategies here to help you save for your down payment. Take advantage of high interest savings products. Now, with the current environment, rates are very low for investments. So don't expect you're going to be making 3% on a savings account. However, conversely, the high interest savings products are low, but mortgage rates are at an all-time low as well. So it kind of balances it out. There is a good opportunity to park your money there, but there are other options as well. Consider paying off your debts. I just kind of jumped over first-time home buyer because I kind of want to get back into that. Consider paying off your debts. The highest interest debt first. A lot of people just think that they just kind of, pay Peter, and, take from Paul to pay Peter and all that kind of stuff. Go with that retail credit card first. The ones that are 19%, 21%, 25%, pay those off first. The lines of credit, the loans. There's also an opportunity when you're looking, if you do qualify for a mortgage, an opportunity to consolidate that and put it to a low interest, lending vehicle, such as a mortgage. Highly, recommend doing that. I'm going to go to that first-time homebuyers program. If you're not familiar with it, again, you need to come and visit us, and you need to understand what that first-time homebuyers plan is. I took advantage of it. I was so glad that I took advantage of it. My brother didn't take advantage of it, and he missed out on putting more of a down payment on his home, and he could have lowered his payments as well. So, utilize this program. If you're not familiar with it, I'll give you just a quick breakup. The strategy includes using your RSPs or your registered savings plan as a means to cover some of your down payment. If you have money in your RSP, the government will allow you to use this money, pull the money out of your RSP, use it towards your down payment tax-free. So the reason why we do RSPs is to avoid paying taxes now, and we pay taxes on that later on when you have a lower income, so you pay lower taxes. The government is allowing you to take money out of your RSP and put it towards the down payment now without being taxed. Now, yes, you have to pay this back within a certain time frame. And Alex, correct me if I'm wrong. I think it's 10 or is it 15 years?
15 years.
15 years. So within 15 years, you have to pay that back, but it's well worth it in the end because you have a larger down payment, a lower mortgage amount, and a better mortgage payment. So you may be thinking also, though, I don't have any RSPs. This happens a lot, right? I don't have any RSPs, so this doesn't apply for me. That's okay. There are ways of utilizing our RSP loan program to boost that balance. I won't get into the details of it, but it's very important to understand that you can get an RSP loan, which is at a typically a lower interest rate, apply it to your RSPs, keep it in there for more than 90 days, and then you can take it out being tax-free. So it's one of the strategies on how you can save money for the future. I did this myself. Okay, so I took out an RSP loan. I put that into my RSPs. I was able to get 25,000, which is the maximum amount that first-time home buyers are allowed to use. I was able to take out 25,000 and apply it to my down payment. You know, I was fortunate. My wife did the same thing. So all of a sudden, we had $50,000 ready for a down payment on top of the money that we saved. And it made total sense to me because now I have to pay back my RSPs. Well, that's like paying myself for the future. Right? It's like a forced savings plan, which I really liked. If you have more questions, and maybe we can take one or two questions now, but if you have more questions, come and see us. There are strategies in order to get more of a down payment for you. Anybody have any questions around that we can answer in like 30 seconds? All good? Okay.
Okay.
Okay. And then the last one here is find cheap ways to do things. I think this is a funny one. I think about my mother and I think about her try teaching me, you know, do you buy everything on sale or are you paying full price? That's something that always has stuck with me. So, are you eating out or cooking at home? You know, how many streaming services do you have? I mean, that might be a tough one because I even have Netflix, Disney, Prime. So maybe we can take that one out. But if you're really interested in getting into the home buying market, you have to take sacrifices now to get in. Once you're in, then you're in a whole different ballgame. You're in a whole different playing field. Now you're in that market. You're able to make better decisions on your finances going forward. So think about how you spend your money, right? That $6 Starbucks Frappuccino, something or other, might not be the best thing for you right now. I bring my coffee to work, by the way. And then we're going to go now into mortgage terminology. So again, we have a wide variety. People that are new to home buying, people that are experienced, but it's still good to go through some of the terminology. Alex?
Yes, thanks, Michael. So I'll quickly go over these. We are coming close to the end of the presentation. So if you do have questions, do let us know. Essentially, I mentioned fixed versus variable mortgage earlier. So a fixed mortgage rate essentially cements the rate that you're getting for the duration of the mortgage term. And the mortgage term is a contract that you're getting into for a duration of time, typically anywhere from 1 to 5 years, that you will commit to paying that mortgage. At the end of that contract, you have to either renew with your existing lender if you're happy with their rates, or look for another lender, and it's your opportunity to move your mortgage without paying significant fees or penalties. Every time you go through a mortgage term, you are closer to amortizing your mortgage. And amortization is a measure of how long it would take to fully pay off your mortgage to zero. So the mortgage term and mortgage amortization kind of go hand in hand, where a typical amortization might be 25 to 30 years, a typical mortgage term is 5 years. So after 5 or 6 mortgage terms, you're typically mortgage free. Now, then it brings us over to the variable mortgage interest rate, where the interest rate is a measure of the prime rate, and that fluctuates over time. Historically, what we've seen was people who went into a variable mortgage rate ended up getting ahead because the prime rate kept falling. But recently, we are rock bottom interest rates. So for the first time in history, most economists, most financial institutions are recommending to go with a fixed mortgage interest rates available to us. In fact, variable rates are for the first time higher than most fixed rates that you're able to find on the market these days as well. A lot of lenders are now discounting prime rate, which is currently 2.45%, by only a few basis points, when you can get a mortgage rate that's fixed for 5 years under 2%. And that's the first time it's ever been that way. So that brings us to the types of mortgages that are available as well. So an open mortgage allows you to pay it out in full or in part at any time during the mortgage term without incurring any penalties whatsoever. Whereas a closed mortgage, typically, because the financial institution is counting on that revenue, it associates a cost if you were to break that mortgage prior to maturity. Now, a lot of times, if you're breaking that mortgage in order to move, you're able to actually take that mortgage, at least with us you can, and apply it towards the purchase of the new property and not incur the penalty. And there are ways that we can work with you to make sure that the penalty would not be applicable. But for the most part, unless you're looking to break the mortgage part way, it makes sense to go with a closed mortgage and a fixed mortgage because of the lower monthly costs. And if you are considering selling the property within a few years, there are options available to you to save on any potential penalties. And we can discuss that on an individual basis if you want to know more. Michael? So, mortgage pre-approval. As Michael and I stressed earlier, we strongly advise against going in firm on an offer if you're buying a home. Now, some lenders would say, well, get a mortgage pre-approval, and some even realtors, because they have a vested interest in selling that property to generate their income, would say get a pre-approval and then you can make a firm offer. For the various reasons we stated earlier, we advise against it. One prime example of going in firm is what happens if you don't have enough down payment and the appraisal comes back less than what you expected. Like if you get carried away with the bidding war, that sometimes happens on a very popular property, the appraiser might come in and say, you know what, this is too much. It's not worth what this person is willing to pay for it. So unless you can come up with a difference, if you went in with a firm offer, you're on the hook potentially for legal costs incurred by the seller if you're not able to close on that property. Sorry, Michael, we jumped ahead a little bit. And finally, there are advantages of getting that pre-approval, and I want to stress it again, it's not for the purpose of going in firm. A mortgage pre-approval will give you a ballpark idea of how much you can afford. With many lenders, including ourselves, it also fixes your rate for you for 120 days. So you have that peace of mind to shop around for a mortgage, or for a property rather, knowing that your mortgage rate is secure. So if you see great mortgage rates right now, 90 days from now, if you're buying a home and the mortgage rates go up, you still have that cemented rate that you got when you applied for that pre-approval. There are some considerations and risks when it comes to getting a mortgage. And here at Alterna, we do pride ourselves on being upfront with you, but it is important that when you're applying for a mortgage with any financial institution, that you read the fine print. Some considerations for when you're shopping for a mortgage include, is there an introductory rate followed by a higher ongoing rate? I know a lot of the big five banks are famous for this. Well, they'll advertise a super artificially low mortgage rate for the first 6 or 9 months, and then it jumps up a couple of percent. Now, for the most part, the math doesn't work out to your advantage. It works out to be the bank's advantage on that. Additionally, there is mortgages with cashback offers where they will give you some cash up front for going with them as a lender. which you can use however you wish. A lot of people use it to do some minor renovations on their new home. But if they do end up selling the home later on, or if they, for one reason or another, do not hold the term to maturity, they are liable to repay 100% of that cash back. So that's just something to consider. Another consideration is, how do they calculate the penalty if you do end up breaking the mortgage term earlier? So there's two ways in Canada we typically calculate penalties, and it's either the interest rate differential. I won't go into the formula too much, but it's essentially, it's the difference between the current mortgage rate and the rate that you got. So as the mortgage rates are falling, those persons who have a fixed mortgage would likely pay a higher penalty. But given that the mortgage rates are lower these days, it's less of a consideration if you're shopping now. For variable rate mortgage, typically it is 3 months interest. And finally, if you do move and sell your home and buy another one, can you port or move your mortgage to the new home? For some lenders, you're able to do that. For others, you're not. So that's something to find out in advance, and if that makes a difference in considering which lender you're going with.
Yeah, very good. Thank you, Alex. That's a great explanation on some of the risks that lenders might have. So we're going to speed it up. We got 9 minutes left. I want to leave a few minutes for some questions. So I'm going to go a little bit quickly here. So just important to have an eye on your credit score. Make sure that, missed payments are going to affect your credit score. Even on credit cards, on phone bills, allowing your gym membership to go into collections is going to have a negative impact on your credit scores, and then the ability to get a mortgage, right? But credit score is only one part of it, a part of our credit decision. We consider overall net worth. You have something to fall back on in case you lose your job. Income versus your debt. Credit worthiness. So score is one piece, but do you have a history of missed payments? Do you have a history of collections? Credit utilization. I think that's also important. Are you maxed out on all your credit cards? Do you have multiple loans, multiple lines of credits, multiple credit inquiries? Like, do you seek credit regularly? Right? That's going to have an effect on how we approve a mortgage. I'm going to move on here. Finding a reputable real estate agent and lawyer, I think it's important to get somebody who is legitimate and that has a great track record. So, leverage your network, your social circles, the communities within, your local community, the people within your local community, leverage those people. A few questions to ask a lawyer, and you can be straight up with them, because there's a lot of real estate lawyers out there. How long have you been a real estate agent? You should know that. What areas have you sold the most homes in? Do you buy and sell homes similar to what I'm interested in? And then the most important, why should I choose you as my agent? I think that, with competition, they should have a credibility or a value proposition statement on why I should go with you than the other ones that are promoting the same things. With lawyers, you might want to do the same things, like how long have you been a licensed lawyer? What are your fees? Why should I choose you as my lawyer? Why should I choose you as my real estate agent, right? So all those kinds of things.
And also cost.
Yeah, cost, of course, right? Typically, what we know, you get what you pay for. So if they're extremely low, you might get extremely low service. If they're extremely high, you may want to get another quote. That's what I would say, right? Yeah. Thanks for that, Alex. We did speak about variable versus fixed. There is no right answer per se, and it really depends on your personal financial situation and preferences. But again, we've kind of touched upon the real that the fixed rate right now is a better option. Fixed pros are interest rate remains consistent for the entire term. the peace of mind that your amortization of your mortgage is guaranteed to remain the same. I'm a fixed mortgage kind of guy. I need that peace of mind, the knowing that my payments are the same and I'm good for my 4 or 5 years. Variable pros are variable interest is that typically over history, variable interest rate mortgages have been lower. Right now might not be that best time. Fixed rate, come and see us about that. And then another pro for a variable is the flexibility to convert it to a fixed rate mortgage. The problem with a variable is that when prime goes up, your rate goes up, your payments might go up. Okay. And so then as a recap, 8-step guide to purchasing a home. I think, make sure you're ready, understand the cost of owning a home, get a pre-approval to understand how much you can really afford. Get a reputable real estate agent and lawyer, make an offer on the home that fits your budget, get that home inspection and do the condition of financing. I think that's very important. Finalize your mortgage with your lender, close the deal and move in. I think, and then the real hard work starts once you have to get into the home. And I'm sure a few of you have already kind of gone through that. The one thing that I did want to share with you right at the end here, we do have a mortgage promotion going on where the mortgage incentive amounts, depending on what mortgage amount you're getting, it depends on what kind of incentive we're able to offer you. And I think it's a very, very competitive offer. As you can see here, a 5-year high ratio fixed mortgage is at 1.64. They're very, very low rates. And if it really applies to you, I think you should take advantage of our promotion. That's ongoing for right now.
And I just wanted to add to that. Sorry, Michael. Those are incentives, meaning it's not a cashback mortgage, which means you do not have to repay it. We essentially would provide those funds to cover your expenses, such as your lawyer fees or the cost of the appraisal.
That's right. So if the appraisal is costing you $300 and we're giving you $600, that's $300 extra that can go towards your legal costs, right, for the lawyer. Yeah.
Exactly.
Yeah. So that concludes our presentation. We do have a few minutes for any questions. I would encourage you, ask away.
Michael, it's Karen.
Hey,
The one thing, there's some young folks here on the phone. They've never had a mortgage before.
yes.
And I'd like you to just give them 3 reasons why they would come to an Alterna savings rather than one of the big FIs for a mortgage.
Well,
What's the benefit? What's your differentiator?
Yeah, thank you. The first one that I'm going to say, and what I noticed in coming to Alterna, is you have a direct line to someone. What you'll find in a big bank is typically you can get transferred, passed around. You might not be able to get to someone, speak to someone. It might be very difficult in that way. The first difference for Alterna is definitely that you can reach us very easily. That we very much pride ourselves on the member experience. There is a difference between being an account number and being Karen, for example, or Alex, or Maddie, or Michael. There is a big difference, and I can tell you that from experience. That would be number one. Number two, Alex, anything?
So as Michael mentioned earlier, it's the Alterna difference, the credit union difference versus a bank. So you becoming a member and purchasing that membership share, you become part owner of the organization. You're able to influence change. We have members who participate consistently on our annual general meetings and raise questions, such as any policy that they may or may not be happy with, compliments and concerns. And it oftentimes results in a change. You don't get that with a bank.
And just to add to that, like as an example, when COVID struck, we had our annual general meeting, and there was a lot of questions around what we're doing to protect to protect the safety of our members. And so there was actually some meaningful change that the CEO took from that, where we put up the sneeze guards really quickly, the distancing, the hand sanitizer, the door management. There was a couple suggestions that people made that we actually listened. The other thing I'll also add to that is if you care about the environment, our investment through our mutual fund partner is all about ethical, environmentally friendly investments. The big banks are going to invest in coal, gas, some of the things that maybe aren't environmentally friendly. We're not. We're all about, that solar power, renewable resources and energies. I think that was another big differentiator.
Thank you for the question, Karen.
Yeah, good question. Does anybody else have a question? We're at 8 o'clock and I want to make sure we get everybody. So I don't know if I have here. Okay, here's some contact information. The first number is our general number for our contact center. I would say that this is a recorded session, so you can revisit it. We'll also, with your blessing, we can send you some details on our branch, on my contact information, Alex's contact information. If you're closer to our Scarborough branch or our Brampton branch or our Streetsville branch, Lakeshore branch, we can get you in touch with the right people. We like warm handoffs. It's never ever cold with Alterna. It's always warm. And we definitely.
And
Yeah.
we will be sending a follow-up survey just for everyone that attended. So if you'd like to fill that out, let us know if you'd like to learn more about this. And you will have an option to contact anyone that would be close to your region. So I myself, I'm out of Ottawa. I know some of you aren't right in the downtown area, so you'll be able to be connected someone that'll be close to you as well too. So just wanted to throw that in.
And Maddie, will you be sending out the recording?
Yeah, I can send it to you, Karen, if you want to disperse it to anyone on your end, or if anyone wanted to respond in the survey as well, if they would like to have the recording. I know Enactus, I believe, was going to be putting it in a library on their website. But yeah, we can make sure that it's dispersed to anyone that would like to have the recording as well.
Great, thanks.
Any other questions that you guys might have? All right. Well, thank you very much. I really appreciate your time on a Monday night, 7 to 8 o'clock. Again, reach out to us. We definitely care, and we definitely want to make a difference in your life. Thank you, everyone. Have a great night.
Thanks, guys. That was great. Thank you.
Bye, everybody.
And Michael, you can